Hello and welcome to this Wednesday edition of FreightWaves Now. I'm your host, Anthony Smith, and coming up, Mike Baudendistel is going to give us a rail intermodal update. But first, we're going to go to Zach Strickland with the carrier update, brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your Wednesday carrier update presented by PowerFleet. I'm Zach Strickland, and we are continuing to see volumes on the rise as our outbound tender volume index is increasing yet again over that 14,000 benchmark that we hit just yesterday. Tender rejection rates, however, still continuing to slide a little bit, back down to 21.61%. That's just slightly down from 21.67% yesterday, so not a huge change in tender rejection rates. Capacity still relatively tight throughout the United States right now. Volumes continue to climb, though. Indication here, again, is that maybe we are seeing some adaptation in the market space as networks become a little bit more able to manage their networks. As volumes are a little bit more consistent right now, we're not seeing as much unexpected surging in the United States. Volumes just are gradually growing over time. So again, not as many spikes. You see back here in the early part of July, or the late part of July, we had a pretty big increase of, volume spiking a little bit towards the end of the month, and then it kind of leveled out a little bit, probably creating a little bit of opportunity for carriers to get back into position. So looking at volatility, you can see our volatility for volume here in this column. Not a lot of green, not a lot of red. That's an indication of what we're talking about here. When you don't have as much volatility, it gives carriers a little bit more time to get back into position, a little bit into place. We've got one of our larger markets in the United States right now showing a strong increase in volume, and that is the Elizabeth, New Jersey market up there around the megalopolis there around New York City. A lot of freight pattern movement in there. Of course, you have a big transition area from the rails, and you also have some DCs and warehouses positioned there that service a lot of that New York City freight inbound there. So a lot of short haul freight and also a lot of long haul freight coming out of Elizabeth, New Jersey. Elsewhere in the United States, you can pick out some of these green markets here. We talked about Twin Falls, Idaho as being one of the more active markets here in the last few days or so. And then just some spotty stuff, again, along the coast of Mexico, or I should say the border of Mexico, putting an ocean there without intent. But the border of Mexico along Texas, still seeing increasing volumes coming out of that area down there. And we have heard a lot of stories about how that market has been a lot tighter than expected this year. Elsewhere, just some bits and pieces here and there up in Duluth, Minnesota, and around Baltimore, Maryland, volumes increasing there pretty decently. Looking at our market share map for the United States, where are we seeing, relational volumes? So this is basically, you add all these markets up, they add up to 100%. The market share values, Atlanta, Georgia, for instance, 4.09% of the total outbound volume in the United States comes out of Atlanta, Georgia today. Harrisburg, Pennsylvania, 3.3%, showing a 9.1% increase in market share. So that means relative to the rest of the country, we're seeing one of the strongest growths in volume coming out of Harrisburg. There's Elizabeth, New Jersey, again, showing up with a 17% increase in market share value week over week. I should mention Toledo, Ohio, Baltimore, Maryland, as you saw on the map. Again, highlighting a lot of the markets you saw in green, but also putting them into perspective into terms of, if you are a carrier out there looking for markets to find some additional freight in the market right now, these are going to be your markets to target with the highest percentage chance of finding some of that outbound freight volume, especially when you're talking about contracted freight, spot market, not necessarily, because tender rejections lead that. So volumes themselves for the Elizabeth, New Jersey market, I broke this out into, you've got city and long haul freight leading the market here in terms of how much volume growth. You can see most of them are green, indicating an increase day over day. But you look over here at the tender rejection rates, most of them for all these lengths of haul are actually coming down. So spot market, like I was mentioning, may not be as active as it was this time last week out of Elizabeth, New Jersey, but contracted freight volumes, again, if you have some accounts up there, probably getting a little bit more active, so be prepared for that. And that'll do it for today's Carrier Update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Welcome to your Rail Intermodal update. I'm here with Mike Baudendistel. Mike, what's the latest?
So it's Wednesday, and every Wednesday the AAR puts out the last week of rail traffic. So there's always something to talk about in the rail world on Wednesday. And so here we have a total carload traffic, and this had been one segment of the rail traffic that had been lagging. I mean, it's very sensitive to the industrial economy, to things like metals and minerals. And at the depths of the shutdowns, it was down about 25%. It's now climbed back and is down about 15% year over year, which is still on an absolute basis the best it's been since call it about April 1st.
Right.
So it does seem like similar to what you were saying with the PMI, new orders picking up, that we're starting to see that on the rail side as well. Also, coal was down a little bit less than it typically is, so that that helps the numbers out as well. One thing to watch here is really look at last year's numbers are in green, and you sort of see usually you would see something like the orange where it increases as the year goes on, and the third quarter is usually the strongest year. That wasn't true last year. Last year the freight economy deteriorated towards the end of the year, and so the rails should start to see better year-over-year comps with the carload traffic. So this down 15%, I'm thinking it should be down more like 10% in the next couple months. So the rails have that to look forward to. Turning to intermodal, these are intermodal containers, and intermodal containers were positive year over year, up about 2%. And we had been talking earlier about how domestic had been really greatly outperforming the international containers, and now international is starting to improve as well. So sort of both of those are coming together, up higher than 2019 and 2017 levels. Still lower than 2018, but that trend that we're seeing more transloading might be starting to come down a little bit. We had been seeing a lot more transloading, more moving to domestic containers, really to replenish some of those inventories, sort of throughout the year. Here we have intermodal trailers, which we talked about on Monday, and sort of resolving to talk more about this since it's kind of been a volatile area. Usually you would think, okay, intermodal trailers, it's a secular decliner every year, is worse than the last, but in the last week it was up about 10% year over year. Unusual situation. I think a lot of that has to do with tight trucking capacity and moving those to intermodal in light of the fact that you don't need a driver, you don't need a tractor. If you have lift pads on the trailer, you can put that trailer on the railroad. It's also a way for a lot of shippers to sort of dip their toe in the water in terms of intermodal. If they go to a railroad, the railroad say, well, let's put lift pads on your trailer and let's see how this service works for you. And later on, you can invest in a partnership that would get you some containers.
Got you. And Mike, real quick, complete shot in the dark maybe, but what's your outlook for intermodal trailers over the next 30 days or so?
Well, what we just heard from Zach Strickland is that some of the spot rate, maybe there's some less spot market activity, and that tender rejections maybe have already peaked. Potentially because they have been down a few days in a row. And so if the market starts to normalize a little bit, I think that's a big negative for trailers. So this might be as good as it gets. You see on an absolute basis in the last week, it is off its high a little bit, even if it is up 10% year over year.
Excellent, Mike. Thank you so much. Insightful as always. We appreciate it. And thank you so much for tuning in. That's going to do for this Rail Intermodal update. And that's also going to wrap up this Wednesday edition of FreightWaves Now. Thank you so much for tuning in. As always, you can check out our content around the clock on FreightWaves TV on all your favorite streaming apps. So please check us out there, including on Apple TV. Thanks so much for tuning in, and we'll see you on the next episode.